Welcome back. Thanks for tuning in. While I have you here, please like this video. Start leaving me a comment. I love to argue with people in the comments. And today I'm going to be covering a couple of things, most notably CREA stats, which I try and do on a monthly basis, the Canadian Real Estate Association stats. And then I'm also going to be covering a couple of different articles. So the CREA stats, the rental shortage predicted by RBC, and also the record immigration numbers that we just hit according to Statistics Canada. And I'm going to try and tie these all together to see how we can get an idea for what we can expect from Canadian real estate over the next couple of months and couple of years. So first things first, looking at the Canadian Real Estate Association's national statistics, they have a couple of highlights here. National home sales rose 2.3% month over month in February. Actual not seasonally adjusted monthly activity came in 40% below February 2022. And I know I talk about this a lot. The real estate industry, the real estate profession, realtors and mortgage professionals are really suffering as a result of this big drop in activity.
You have no power here.
The number of newly listed properties, so supply, dropped by 7.9% month over month. So we're not seeing a lot of supply. You're hearing about inventory scarcity. This is kind of propping prices up. The MLS HPI, or house price index, continued to edge down. It dropped 1.1% month over month and was down 15.8% year over year. And the actual not seasonally adjusted national average price posted a 18.9% year over year decline in February. These are record numbers. That's the most HPI has ever dropped in a year over year basis, and that's the largest actual national average drop in sale price that we've seen on a year over year basis. Significant changes in the price in Canadian real estate. The question is the worst behind us? My guess would be probably yes. You are seeing prices trending up a little bit into the spring. It's almost like we returned to a seasonal cyclicality, which I did mention in my last update about Toronto real estate statistics. See whether or not prices are actually moving up is the sale to list price ratio. And so for the last 6 months, 7 months, we saw the sale to list price ratio below 100. If you look at the volume chart on the CREA stats, you can see it's this bouncy red line, and then it kind of drops well below the 10-year monthly moving average, and it's going to stay there likely as we start facing further uncertainty like US bank failures and challenges in the economy and the global financial system. And eventually it rebounds, and it rebounds in a meaningful way. But for the time being, I would say Canadians respond to financial uncertainty by pausing purchase decisions, and that's an important piece to remember going through this year. So the chart on Bloomberg says Canada hits another population milestone. And what you can see on this chart is the yearly percentage change in population. The last time we set a record, other than last year, was 1989, which is coincidentally the last peak of the Canadian housing market. And you can kind of see actually these bumps, and they almost follow what happens in the Canadian economy and in Canadian house prices. So my guess would be that it's going to be tough to sustain this level of immigration, but it's also a headwind for affordability. National Bank also came out with their quarterly housing affordability monitor, and we've actually seen housing affordability start to correct. So it's come over the peak and is actually trending downward as a result of incomes going up. We know incomes are now growing faster than the rate of inflation at 5.4%, and CPI is at 5.2%. So you have a net positive income growth. And you're also seeing prices coming down, and interest rates are staying relatively stable. So mortgage payment as a percentage of income, or affordability as measured by National Bank, is now improving. The challenge is, as you start immigrating more people, this creates excess demand for housing, and this pushes up rents, which can push up price, but it also pushes up prices for those immigrants who are buying more and more homes, meaning more competition in the housing purchase side of things. The final piece that I'll talk about, and it's an important piece when you're thinking about immigration, is a lot of that immigration growth comes from non-permanent residents, so people who are students or temporary workers, and they rent. But also, according to Statistics Canada, greater than 50% of new immigrants rent in their first year of living in Canada anyways. So the idea that immigration is instantly bullish for Canadian housing or immediately bullish for Canadian housing is a little bit misguided. I think it is gradually or eventually bullish. But the way that it's bullish is, again, it creates excess demand for rental. and then rents climb, and rents are the income portion of an investment property. So if you look at the way that people analyze investment properties, you have net operating income divided by purchase price. And if your income portion is growing, then your cap rate stays the same, then the purchase price will go up as a result of rents climbing. RBC just put out this report. It says Canada's shortage of rental housing could quadruple by 2026. Last year, Canada's purpose-built rental housing stock grew at its fastest pace since 2014. But they say that without significant boost in rental stock, Canada's rental housing gap could exceed 120,000 by 2026. So again, this is going to have further upward pressure on rents and eventually further upward pressure on price. And again, going back to Stats Canada, statistically, immigrants rent for about 3 years and then go and purchase. So I think in the fullness of time, after a little bit of a lag, and I think probably a little bit of a suffering period for the Canadian economy, you do see recovery take place. And the final piece I'll leave you with here, and going back to that graph from Bloomberg, is if you look at these population milestones, those major bumps that you see, and again, looking back to 1989, you see a peak of 1.84% population growth. 1989, the housing market peaked, and Canada was in recession for a considerable period of time thereafter. House prices were in decline from 1989 until 1984. During that period of time, immigration or population growth contracted, and we didn't see it really recover in a meaningful way until recently. What this tells us is, and it's basic math, people who are immigrating want affordable housing or need affordable housing. The economics of immigrating need to make sense. So they need affordable housing. They want to have a good job. They need to have a job that can help them to afford that housing, and they want a stable economy, or they need a stable economy. And so the biggest headwind, I think, for all of these factors, house prices, immigration, and for rents, is whether or not the Canadian economy slips into a recession within this year, which I would estimate that it likely will. And then after that, how severe of a recession do we end up in throughout this year in Canada? And we already know that last month we saw 0% GDP growth in Canada. And that, after adjusting for inflation, that's a real negative growth in GDP in Canada. And so from my perspective, we're already in our first quarter of recession. The question becomes, how bad does it get, and what is the impact on immigration, on house prices, and on the rental market? So I hope that all of these data points, I hope I didn't go through them too quickly, but I also hope that these data points created value for you and made sense. And if you have any questions or comments or concerns, or you want to discuss, I'd be happy to have a conversation with you in the comments. Please like this if it created any value for you. It helps other people find the video. And I think that's all I got for you today.